Good afternoon, guys. It looks like we've got our guests joining us in the on our Zoom link in the room, and welcome to our SG Red Trust quarterly update. This is our year-end, I guess not year-end, pardon me, our October last quarter of the year update for the Red Trust. We've, I think, been fairly consistent, as you guys all know, in delivering our unit holders some information every webinar and trying to do it either quarterly or seasonally. So this one we will try to, just go lightly over some of the housekeeping slides. Our obviously introductions of who we are, my partners, John and Michael. Everybody's from with us, so welcome John and Michael, and obviously into the call. And then in the background there, you also have our trustees and our controller, Scott. So again, welcome everyone. Our approach, as we've stated all along the way, has been, I think, one that's been exhibiting continuity and consistency. We want to make sure that we are doing our job. Our job is to exit these projects at the best price that we can. And to do that, we've got our different strengths at the table to be able to work these projects on a daily basis and make sure that we're heading in the right direction. Despite some of the speed bumps and barriers and different things going on in our economy right now, we're still on a good track, and we're looking to share this information with everybody as we make our way through the financials and the market update, as well as the project updates. So once again, just some housekeeping screens here. I mentioned our trustees. We have a two-tier system. We have independent trustees, as well as myself as an operating trustee. And then we have our general partners, which just simply means that you have to get through two levels every time we make a financial decision. And we will talk about a bit of that when we get closer to the end of this presentation today. The four projects I think everyone's well aware of. We're not making any additional acquisitions to the trust at this time. It is open to do so if we did want to solicit a approval from the unit holders yourselves to purchase another property. We would actually put that forward, give the business case, open to raise more money, and then ultimately our trustees, our independent trustees, would say yes or no. At this point, and consistently for the last year, we have decided that this is quite fine where we sit right now. There is no need to be looking further for other properties unless something really comes together and comes at us that's a good bargain. We've mentioned several times, I think, over the last year, like our central principle is to get this land ready for a builder or another development partner to purchase, a construction partner, somebody who wants to build it. They don't want to do the heavy lifting of land development. So what we're always keeping an eye on is obviously the pricing trends of homes across the province, especially in the markets we're in. And then we're looking at the, what do people pay for a lot, a piece of land, if they're selling, in this case, really in the mid-market at the 600 level. So we know our target for any property has to be heading towards $100,000 per door. And again, this is single family doors, and there's lots of other math to go with it, but that's what we keep our eye on. We were doing the math based on, can we get this property developed to a point where it's attractive for a builder to pay X per door, because they've got to be able to make their margins. So that's, in the background, what we're always watching. Again, we're always looking for the exits, no matter what stage of development we're at. We don't always advertise, as we've talked about in previous webinars. We don't go out and put things on MLS and start doing that. We might shake the trees and have conversations in our network as such. So I'm just getting to the financials here, and this is the housekeeping reminder. The numbers probably look relatively small on your screen. They're not so bad on this particular slide deck. However, we don't expect you to review everything on the screen if you watch the video that's being recorded right now. And that's sorry, just checking, make sure I was recording. That's the most important. You can go back and watch the recording, and it'll also be PDF. We'll take this PowerPoint and we'll make it into PDF, both of which will be made available to you through emails that you get from Mary Thibodeau or visiting the portal, and they'll be posted up there as well. So this is the first property for the interim financials. This is Wellington. You'll notice there's not a lot of activity in Wellington. We just keep shifting a little bit of money from our current GICs inside the trust, inside of another LP, to make sure we're paying for all of the continual costs of the administration, accounting, and soft costs. And sometimes there's just small amounts of costs that come up. But in general, this property, you'll hear this from John, has just been ready to go. It's ready to be developed. We're waiting on still some servicing requirements and stuff, and I'll leave that for John to share, as well as some of the local market activity that's happening around Wellington. Similar again with Cambridge. We don't have to do a lot in Cambridge at the moment. We are watching very carefully our friends in LJM next door to us, and they had just assembled their land, going from 4 parcels down to 2. So even though there's not a lot of activity financially on this, we do have a fair amount of reserve, sitting there $400,000 in the event that we have to do any remediation or changes to the land, or demolish the current house or existing storage building on the facility. So we just keep working the process. Again, you'll hear this from John. Port Colborne has already been submitted, and again, there's not a lot of activity. You'll notice we do have a large reserve on this particular one, and that's normal in the Port Colborne area. They the nickel mines and nickel processing that's in the area, which lays a bit of a contamination on the ground everywhere. It's not our property, it's every property, so you have to remediate the first 6 inches of dirt on every property. So we keep that reserve there just in case. But on the same time, given interest rate hikes, we're making 5% on our reserve monies now, which was great. A couple of years ago, we made 0 money on reserve money. So this is the one upside of rising interest rates, is we get to make a little bit of money on the reserve. And that, of course, flows through to the benefit of the unit holders. The last one, of course, Picton. Same thing. We're not doing a lot of spending right now. We've done all of the planning. John's team's gone through mostly all of the aspects. We are working through a little bit of, I think there's just a few things left on the EIS that we're waiting for, and that's about it. And again, John will talk about that. If you want more detail, you have a specific question, please take a look at the video afterwards, and take a look at the PDF PowerPoint if you want to zoom in. Email those through to Mary or invest@SAM, whichever email address you want to use on the portal, or Mary's address directly, and we'll make sure we get answers to the questions. But that's as much as I'm going to go in for detail. We've got a good cash position. We've been prudent to keep our spending down, and we just are watching to make sure we do our job, which is exit these projects. This our timeline here, our chart. We haven't made the changes to it for the year end yet. So our target dates are being pushed out. Most of them are very close. You'll notice this yellow one. I think we might have mentioned it at our last meeting at the AGM. We do have some great news with Picton down there. And we've got Port Colborne fully submitted. Cambridge is ready to submit in a few weeks. So it's really close to being on schedule. And Wellington, of course, is already submitted. We're just waiting for the servicing. So not a lot of change there, but we will make sure we do updates on that. So I apologize. It hasn't been adjusted to push some things into the fourth quarter or moving into the first quarter of 2024. So this is going to be a transition. I'm going to bring John in on the project management side of each of the projects, the development side, pardon me. Thank you, John. We've got that first screen there with some neat news in Wellington. So I'm just going to see if I can...
It's fine. You can leave that portion.
Yeah, I'll leave that on there. Okay.
Yeah. So with Wellington, as Doug mentioned, this was submitted last May. We've had a few challenges with the Ministry and Conservation, and we had to amend the site slightly by moving some units to the north. Doesn't change the density or the count, so that's fine. But the county's been very, very slow, and that's not just for Wellington or our site, it's the whole county. They've reduced, well, not reduced, they've lost a couple of planners, so there's only one left, and that has slowed the process down. But the red planner, which is the Wellington urban boundary, we are the green location. Just for the market research that we've done, the 2 yellow spots are for sale, similar size to our sites. I think they're up for 5.2 million and 4.9 million. Our site is, I would say, 3 to 4 years ahead of theirs. that is due to we've been working on the planning for 2 years. It's already rezoned, and we're just going through the site plan approval. These two sites are still raw land. Even though they're in the urban boundary, they still need to be rezoned and go through a draft plan and site plan approval. So you're still looking minimum of 3 to 4 years before they get to our stage. So it just shows that the value of properties within the Wellington region, it's staying up there. And for us to get our return, we are looking for around about 5 million, but as a finished stage, or 5.5.
Just as a reminder to unit holders, this is in Prince Edward County. I know we refer to it as the county, but for those who aren't familiar with Prince Edward County, and both Picton and Wellington are both in Prince Edward County, and I'm always shocked when I see this massive size of this urban boundary they put in for Wellington. They're looking to grow that community by 5-fold, 6-fold maybe. And John,
Yeah.
this is the slide. You're just showing this building you refer to here.
Yeah, so the one with the arrow, this will have to be pushed forward. So we're gonna move the parking. We had all the parking in the middle, and now we're gonna have to put it behind the building. So it doesn't reduce the count. It just makes it. We just move the property to match the one to the right of it as well. And the building to the south of it that has a cross on that is a municipal building, that rental building that has been demolished, and they're upgrading and increasing the density. Wellington is one of those small towns which really will be growing, as Doug mentioned, tenfold. They do believe the population is going to go from 2,000 to over 10,000 in the next 5 years.
So then we have Cambridge.
So Cambridge, we're so close, and we should have submitted 2 weeks ago, but the team was not happy with our EIS. There's nothing wrong with the EIS. It's just that the wording that we had in it, we needed to change some of it to match the adjacent property, which we have done now, and I believe the team is happy. So we should be submitting for rezoning and draft plan this week for Cambridge.
Yeah, so I was mentioning there on my notes that LGM, the next door neighbor here, who's going to build 5 towers, has now assembled their land. They notified us as well as all the other neighboring properties, and that's a big thing when a company does that. Like, there's our 2 properties. This is LGM's house here, similar to what we bought at 66 Hyman, and this is there, and then they've got another parcel and can't see off the screen. But they've absolutely are putting their.
Just going back to Cambridge, I've just seen a question about Cambridge EIS. EIS is the environmental impact study, and that really takes in consideration the trees, the wildlife, bats, and everything that's on our property. But as you can see from our side to the site to the left of us, which is full of trees, and now it's just a southern portion which has brush. So the EIS is fine, the environmental impact study. It's just that some of the wording we didn't like, and it just brings up questions that this doesn't need any. And that's why we are just amending some wording. The engineers will not change the findings. It's just wording.
All right, that takes us to Port Colborne.
So Port Colborne, that was submitted, I think it's a month ago. We've had our first public meeting, and there were some queries about wildlife and everything else, but it's just a standard planning meetings that we have. Once you submit, you have a public meeting, then you have council meetings. But we don't foresee any problems. The capacities there, all the reports have done. We're still working through our risk assessment. That's because, as Doug mentioned, the whole of most of Port Colborne has a fine layer of nickel, and that's due to the stacks, the smoke stacks in the 50s, I believe. It's heavy metal, so it doesn't leach, and it's only in the top portion. We knew this when we went into this site. We would have to remediate, and that's why we raise a little bit more money to do that. But the plan is for this site is we get it to draft plan subdivision, we sell it and let the builder remediate. That's our plan. That being said, we do have excess money that we've raised if we have to push it. Most of the contamination will be put into a burn in the southern portion of the site towards the water, where the cursor is now, and that we would have to put one there anyway for some noise pollution to the south. So that will take on a lot of the contaminated soil, and we'll put a soft cap on top, and it would just be a feature. But everything's moving forward with that one. And this one is Picton.
Yeah, it brings us back to Picton. Sorry.
Yeah, this is our last site. All the reports of engineering is done. EIS, environmental impact study. The draft version is complete. The ESA, which is phase 1 and phase 2 for contamination, that's complete. We have the draft form already. So all the archaeology is complete. So all the engineering that we need to do to submit is complete, but we're on hold at the moment because, as you can see from this slide, we've had a conditional offer for 12.8 million. And so we're waiting for them to go firm. There's only one report that needed to complete and submit for us, and that's the TIS. But from our side, if the site's going to be changed slightly, there's no point in us doing the TIS.
Yeah, it's a good talking point, John. Like you do get to a certain point in development where you don't want to go too deep and spend money on something that someone else is going to come in and want a red line. And in this case, we've got a very reputable individual builder who's got an offer. You know, we've signed this the sale on conditions that he's satisfied, and I believe we've got about 20 more days left before we may get to the next deadline. But it's great news. I said this to you guys at the beginning. I probably should have opened with this slide because it's a completely upbeat compared to the high interest rates and certain slowdowns that we've been seeing in the real estate market. But certainly it votes well for exactly the process and the tenacity. And honestly, I think too, it's well worth mentioning that if for whatever reason, and I don't want to bring bad luck to the table, but if we had to hold this property for a little bit longer, and knowing what we know about Wellington and Prince Edward County and the depth of what is happening in that area and the prices, the price is just going to go up. We just we've made a decision to take an offer that was on the table, and in a time when offers are slim right now with the interest rate hike and inflation. So I hopefully have better news, and not better news, hopefully I have really good news about the closing of this by the end of the month and into November. So we went through that really quickly. We got to have some more comments. Michael, you're always good for a comment.
I just got to say, great work, John. John really spearheaded the value add here, and negotiating off of a year and a half ago, and negotiating the change in policy of the land beside us that allowed us to get more closer to that property line. Like really, really great value add thing. So just highlight John in terms of the amount of work he's done on this project. John drives out there like once a week. You drive, you go down there.
It's just the last 2 weeks.
You're going tomorrow.
Last week, I'm there tomorrow.
Yeah. So John is out there all the time. He's on the ground, and he's really been the driving force of the value here. So I just want to highlight that. And this is great. This is a great news story. The only comment I'll make is overall is what we're watching for, and what I'm thinking about is just still watching those construction costs that I talked about at the last couple of quarterlies. The construction costs, the land values are there. The land values are staying high. We're seeing some of the comparables that John showed us. The risk that we look at in terms of the development business today is what's going to happen with construction costs, because that is an uncertainty that makes it difficult for builders to commit. And so when I think about the work that we're doing here as a general partnership and as a full investor group, the things I'm really watching out for, the challenges that might slow us down a little bit are those uncertainties in construction costs today. And I don't think that's going to impact value. I just see that, if anything, impacting just timelines, 3 months or 6 months, things just might take a little bit longer because builders need a little bit more uncertainty. And that's one of our primary customer is the builder looking for ready land. So I just wanted to highlight that, let everyone know that we're watching that. I'm watching that. And there's nothing we can do. That's totally beyond our control what the economy does for the cost of goods. But it's certainly something we want to be aware of.
Yeah. So I guess maybe just not trying to stretch it out here. I don't see any questions in the chat, but one of the things too, I think we lose sight of because of the amount of work that's going on in John's team and all the activity with all of the different properties is, what we have into them and what do we sell them for. So we flash the financials up and we flash all this up, but in the plan for development is a 2 to 3 year process. Push hard, get the approval in 2 years, try and exit before 3 years, and then you're targeting that 20% rate of return annualized on there. And right now, with Picton, we're sitting in a great position, and the Wellington's, sitting in a great position, as we saw from the adjacent property, or not adjacent, sorry, the similar properties that are there, Port Colborne, with getting the 300 plus units in there and 300 plus units into Cambridge. We started out, we thought Cambridge can get 100 units in there, that'd be great. And then, of course, the push is really to get to 300. So we're hoping to have lots of good news. I see got another question that popped up. I thought my little delay tactic would get one question in there. Yes, we'll be providing updates on Picton as soon as we have anything firm from Picton. As far as this particular offer we have on it, we will circulate it and let folks know. We already know, because of the time of the year that we're into, being October the 10th, even if we were to close this by the end of the year, distributions would still not be settled until the first quarter of 2024, and that's usually the follow-up question when we're talking about a close coming. And that would be hopefully in the early part of 2024 for the accounting clearance, and then for the March 31st distribution. So, gentlemen, do we have any other points that we didn't cover? We went awfully quickly.
We're in the boring stage of development, so there's things are moving along.
So we got another question here. What it looks like when the property is sold, the funds are distributed. So what I was when I was explaining the timing, what you want to do is picture the different buckets that are involved. We have a bucket that the property sits in, which is the the land corporation. Then we have a bucket that the money flows in, which is the LP, but it has to get to the LP from the trust. So as a unit holder, you've given your money to the trust. The trust has said, okay, there's these 4 limited partnerships that are proposing to buy these pieces of lands. Yes, we approve the acquisition of these lands. Then we buy the land and we put it into a land corp, so that if we didn't want to sell it to another buyer, we just sell them the corp, and that's the reason for that. So when we go to distribute the funds, all the funds come back to the LP, the sale, and then we move the land corp, of course, over to the new buyer. Once we settle all of the costs with closing and any other costs at that level, all of those funds it's a flow through. They must flow through to the trust, and they can't sit in the trust more than 1 quarter. So, and nor do we want them to sit there. Once they're in the trust, we don't really have a mechanism to do anything with the money, save and except the fact that we might make 5% on a GIC right now. But that, again, is to the benefit of the unit holders. To the bigger benefit of the unit holders is expediting the process as much as possible and getting all of the capital back to you. Once the capital is paid out, all the units that are paid back from the LP to the trust and to the unit holders, then the distribution of income from the sale of the property, and that comes to you as fully taxable income. So if you're a cash investor through your personal or your corporation, you get it as business income. And if you're a registered investor through your RSP, TFSA, your RIF, pardon me, not your RIF, but your LIRA, then you're going to get it back through there. And of course, there's no tax on that income in those. So for those unit holders who have a taxable position, you would have a T-slip of business income for 2024. You won't have it in 2023. And that is why, too, I didn't mention this. I should have. That is why you've been getting solicited by Mary Thibodeau to get your information up to date, make sure your banking's up to date, make sure your birth dates are correct, making sure that your address and your emails and everything else is up to date in our system. Because once we do the distributions, we will have to, of course, distribute out those funds. Updated timeline on the other projects regarding completion and distribution.
Well, Doug, I can explain a little bit on the timelines. I'm not sure about the distributions, but as we submit with the new legislation, the county or the city has 90 days to approve. So we should be with Wellington, we should have been done by now, but we submitted before the legislation changed. So they do have some leeway there. Port Colborne, that one should be approved by beginning of January. And that means it'd be a good time to sell in the spring. Cambridge will be more than likely February to March once it's fully approved. And those are really just guidelines. And then we will be reaching out to local builders during that time, but we need that feedback to understand the full length of time it will take to get it all approved. But once we know that, then it's a lot easier to reach out to builders to give them the timeline. But we should be offering all the sites really from December to March.
Yeah, I think from a layman perspective, and I don't mean that in a negative way, just if you're trying to mark your calendar and going, okay, where are we at with these projects? All of our projects should be getting into approval and looking for serious offers between really the second quarter of 2024. By the time we hit the end of the second quarter, we should have entertained offers on properties, assuming that the market's getting a little more robust and maybe get some handle on interest rate directions and everything else that goes with that. Another question here on any chance of starting a new fund, another fund. We actually have modeled another fund and we've put it on hold due to the market conditions. So we'll see. I don't know. We haven't, we've got to get through this next period, I think, of with Picton and our properties. We're pretty heavily weighed in right now. I think as a point to note, we don't stop looking at opportunities. We're certainly, all three of us are getting opportunities brought to us on a pretty regular basis. They just haven't been that attractive to get us to be motivated to, set it up. It takes us about 3 to 4 months to set up the fund, and a lot of it is a little bit of repeat, documents and legal and stuff, but you still have to go through the process. So it's not a decision you want to make lightly. You want to make sure you're going to do that. You're going to do it for that, it's another 5-year relationship. So what's the other question there? Oh, just a thank you. Thank you. Oh, yes, thank you. We absolutely think it's great to be given these updates. What is the amount of unearmarked excess funds at the current time? I have to guess at that for that question. So we have about 1.5 million in GICs in total on the trust. If I was to guess, and we don't have to do anything extensive to Port Colborne, we might have 500,000 of excess funds. So those funds are still included, just for clarity. Those funds are still included in the pro forma. So, we still have to deliver returns on the funds, even if they're sitting cash and GICs. Getting 5% on the money, it's a good thing actually, it's a good thing for us, because we normally would budget 0% on that money, or half a point on it back when interest rates were so low. What is current investors to be added to the email distribution list if you sign up a new project? Oh, we will circulate it to all of our investors. We have about 850 investors in total that are involved in our projects collectively. So everybody will get a notification. We won't hardcore solicit, specifically the fund. We may send out a couple of communications and then redirect you to a portal, as we've done in the past, and you would go to that portal and then sign up to follow that portal. And as we release more information and the opportunity to to start to take reservations, then you would get those communications. Well, I don't see any other new questions popping up. And we're 30 minutes in. That's a fairly quick call this time. So as I said, we will package this up so that the video is reviewable on the portal and by link from Mary when she sends it out, along with the PDF on there. And you'll have access to that. So if you do know somebody who hasn't been able to watch this, then certainly let them know to take a note on it. And I hope the next thing I'm sending is a communication to everybody saying that we've gone firm with our conditional sale and we can celebrate the first win for the SG Red Trust. Thank you, everyone. Thank you, Michael, John. Thank you, Darren, Christopher, Scott. And take care, everyone. We will see you all soon.
Okay.
Thanks, Doug. Thanks, everyone.